Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the just the contraction in volatility on the charts, which does suggest a highly volatile week to come up, where we do see that compression into just a wedge along our macro downtrend, just really holding on to one price more or less, and that has to give way eventually to high volatility in one direction or another. So let's go ahead and see how stocks closed last week. Of course, they did close deep in the red, and we are seeing some disturbing trends on the futures markets. So we'll be taking a look at that in the coming week as markets open up, on Monday. Let's see, guys. On a Monday, we do have some manufacturing data that will be coming in, and of course, a lot of this will indicate how the economy is doing. We also have a meeting by the Fed. I don't know, everyone's calling it an emergency meeting. It's just a normal meeting from what I can tell. They have meetings all of the time. They don't have to stick to a specific schedule, and they meet whenever there's any reason to meet. They don't just it's not an emergency meeting, guys. However, we do have issues such as, banks threatening to collapse. We have, of course, China considering that it's going to dump U.S. bonds on the market in order to buy back its own currency to shore up the price of its own Chinese yuan. And guys, so this should be a fairly volatile week, especially how stocks are pointed in the down direction. Looking at the Bitcoin chart, we do see that we have just been tapering into this kind of wedge, into this, certain level that we've just been holding. And, markets just can't do that. There's just too much unpredictability to it. If markets were perfectly predictable, then of course everyone would be a millionaire. And so there has to be some type of random number generation in there. There has to be some type of meandering, some type of moving like a river, with just the up and downs, these type of sine wave patterns, give and take. We can't just hold one price flat. It doesn't make any sense. I mean, the market would be dead in that case. Guys, let's go ahead and just zoom in order to see a little bit more detail. And you do see that we are currently breaking down from this little bit of a formation that we had in here. And I want to just zoom back out to give some context to what you're seeing right now and why it's so important. Well, to do that, let me go ahead and throw on a trend line, and you guys can immediately see the importance of this trend line going all the way back to the top of the market in April 2021, tagging the top of the market on this little bounce here in in September 2021, and then of course shoring up, holding up the lows in March, basically holding up the entire formation in May, and again, like, we got on top of it, but we are, if I just zoom in, breaking down from that level almost precisely. And if you see where these wicks are tagging, guys, this was holding on to a macro line there, right? This line is no joke. And so when you see these wicks explosively popping up and then explosively breaking down, explosively breaking down, explosively popping up, and again we're threatening to break down, it's because this line is so important. You see that crazy wick that we had? Look exactly where it tagged. It tagged this macro trend line that we are starting to lose again. And where was the exact center of this volatile movement here? Look at this. Popped all the way back up to that critically important, trend line on Bitcoin, almost to the dollar, and then chopped its way up until it had to just come back down to it. And where did it gravitate to? The trend line, guys. Same thing here. Popped up, broke down there, broke down, came right back to it. Same thing here. That Jerome Powell craziness popped up, grabbed the line, broke down, retested it, broke down, and then finally it held it, but but Bitcoin didn't have enough energy to go any further than that. It only had enough energy to tag this line. And so guys, this line is really, really important. Both halves, you may wonder, why was there kind of a diagonal here? Both halves of this movement on this drop surrounded this particular line, not any other line, just this line. Same thing here. We had a critical drop on Bitcoin all the way from the top of the market. Where did we find support? Pow, we hit that line, and then boom, right on top of that line, a little bit exuberant, came back to the line, held it, broke down, came back to the line. Guys, this line is incredibly important. And so, why am I emphasizing this so much? Because we're losing it. We're losing it. And if you look at this line, at least in this era of Bitcoin, being on top of that line has been associated with bullishness, and being underneath that line has been associated with catastrophic breakdowns, right? Not only here and here and here, right? But also here, right, during the May dump in 2021, and also here in that September dump that was just incredibly powerful to the downside. People lost everything that they gained in this entire move. They lost it in that one candle down. And so, guys, when I tell you that we are losing this critical line, that should be no joke, okay? We're losing that line right at the same time that we're deflecting off of that macro downtrend, right? And so guys, these are two incredibly powerful lines to the downside. And while this kind of mid-range radial, I guess you would call it, has been supportive, it was never supportive for very long. In fact, you can only see it offering some type of a bounce here in March 1st, in which case, February 25th, in which case you popped up, but you came right back down. You gave it all back. You popped up again, made an effort, but you came right back down. This thing has never been able to support the market. In fact, it appears to be lower lines that supported these big moves on the market. And so we're playing with a line that likes to see rejection to the downside hard, and then also which is not very supportive. So again, guys, losing this line is a big deal, and it's also a big deal in the context of our daily volatility, which is just pressed against the floor. It's just screaming. And so now that we're starting to wedge ourselves right against the floor, and this thing will probably come to some type of closure, some type of resolution within, it could be today, it could be tomorrow, within a couple days. This thing should just completely maximize and then start to cross the other direction. And when that happens, you will see volatility expanding, and it will choose a direction, and it should be fairly powerful. If we look at the 2-day, we can see that we're just having some type of continuation to the upside, and so the beginning of that has already started on the 20th, but this formation is a little bit janky, so I don't know if I trust it. Let's go ahead and look. We can see that the 3-day is also trying to pinch off, so maybe the daily is waiting for the 3-day. Let's get the 5-day, looks like the 2-day. The weekly is just crossing over, and so when this thing starts to turn up, that could also be a very powerful move. So the weekly and the daily are telling us something. And then also the 2-week is entering a contraction phase. So we're going to have to see what that will mean. But watch this space. So basically, I think the weekly, the 2-week, and the daily are most interesting to me. Of course, we also have the 4-hour just screaming and starting to turn up as well as we start to point to the downside. So watch this space. However, this isn't the most ideal setup to be watching. There's this sideways action on it. So 4-hour, not 100% sure what we're going to get out of that. but we are watching it, and you can see that some volatility is starting to creep back into the market as we lose that line and then recapture it. You see how this line works? Look how, just price action just gravitates and wraps around it like a snake curling around a tree branch or curling around its prey. This is a boa constrictor just, strangling whatever it gets a hold of. And unfortunately, if your wallet is in this market, it will be strangling that next as it makes its next move, potentially to the downside, having explored the top side already and put in this weird kind of it looks like a fairly bearish pattern to me. Guys, for our key levels to watch, let's go ahead. I did update our momentum zones. These are good until the end of the day. And so basically, this is where we'd like to see our closures be ahead of in order to have some type of a bias in direction. In terms of our projections, if I do throw ahead our momentum boxes, of course, I did suggest on this move and this move that we had to get over this area. Really, that doesn't change too much, except that it does lower, right? It does lower as we come down here. And so, in terms of macro, if you want to be macro bullish on something, I really suggest that we need to get above 19,800, and then we could potentially see up to 20,600. At least for the first move. If you want to be just kind of 2 day to 5 day, this type of perspective, bullish, we really need to hold above 19,330, and we absolutely cannot lose 18,000. Well, let's just call it 19,000. If you want to be just kind of a midterm, bullish, then like the 2 day to the weekly, then you want to be above that 19,000, which we are losing currently, right? And if you want to be have any hope for bullishness on the daily, which the numbers that I gave you on Friday have held us pretty well through the weekend. So I haven't had to update them at all. But if you want to continue to hold on the daily, the number to beat is going to be this $18,900 within the next half an hour. If we get a close above there, we will have met the minimum threshold, essentially exactly where we are. But guys, we will have lost everything. We will have lost bullishness on almost every other time frame, and we will just be hanging on by a thread, right? Just by a tiny thread, we'll be hanging on to that on the daily. And so if volatility starts to spike and we have closed the daily candle above 18,900, then bias will be slightly to the upside, not strongly, because we didn't capture this blue box and we didn't capture the top of my momentum zone. And so this is a very weak reading here. Ideally, if within the next half an hour we pump up and capture 19,300, then I could say anywhere from the daily to the 5 day, we have the potential for bullishness quite reasonably good in our favor. But being underneath 19,200, I just feel doubtful about the daily. It's just in kind of like a very questionable area. We really, at a minimum, should be holding above 19,200 in order to have any type of certainty going along with what we would like to see in terms of a bias to the upside. And then to be reasonably sure of that, we're looking for 19,300. But guys, just our critically low level is 18,900, and we are starting to challenge that for the 2 day. For the 2 day, that critical low is 19,000, and we have already lost that. I doubt that we'll be able to recover this zone, and so we are in danger of losing this zone. And as we are presented in the current orientation, my bias on that volatility explosion, should it happen, this later tonight, or should it happen tomorrow, then my bias would probably be to the downside. Okay, just to be frank with you, we did not hold on to the top of that momentum zone. We did not break out. We did not do anything interesting. We are not doing anything that looks good here. If I do throw on our EMAs, then we can see that, yeah, like I was suggesting in the last one for Ethereum and the stock market, we were losing our EMAs, and now Bitcoin has quite clearly lost its EMA structure on the daily, and it is in a squeeze now to the downside. So that's not good. This is not a good look for Bitcoin. And it's going to be very difficult to recover from this if it becomes catastrophic. Let's go ahead and jump over to the weekly just to see how we are oriented on the week. And you can see that we are just rejected from the 9, and we are also rejected from the 4. And this thing does look situated to cross to the downside. We still have our 300 SMA at 17,600. So if you do want a potential stop point, we could suggest perhaps that 17,600 as just a place to look around, and that would correspond with our wick in June, to that June low. And so perhaps we'll get a little bit of a double bottom bounce there, or we could just cut through it. But typically speaking, that would be a nice place to bounce. Let's see if I can get a reading on our fib. Yeah, that's also the 786 fib. So again, this is a potential supportive area for us. And if we look to the left, we can see some wicks over there. Of course, we've bounced there before, so we could bounce there again. So just as a first stop, you might want to consider that 17,600, 17,700 area as a possible first stop on the way down. Let's go ahead and look to see if I have anything else marked here, and just my momentum boxes. Of course, we have our CME gaps up at the top, and then on our support and resistance lines. Yeah, that 17,600 also corresponds to the top of this supportive level here. So if I just zoom out so you can kind of see what I'm looking at, maybe turn off these EMAs, and you can see these red and blue stripes that go up and down my chart. You can see that green box sits right on top of it, which is exactly where the 786 is, where exactly is all of this leading to in terms of a first stop. But if we do just examine a little bit more on this structure, let's go to maybe a 3-day. There we go. We can see some type of a head and shoulder perhaps at work here, right? Something like this could perhaps be in effect. And if so, then the measured move on that one could take us down to this $12,000 area. So guys, I'm seeing anything. I'm seeing a first stop at a 17,600-ish, and then I'm seeing us press down into the 14,000 area, perhaps even down to 12,000. Okay, guys. Sorry to be the bearer of bearish news, but that's just what I'm seeing at the moment. Let's go ahead and just turn these off. Let's go ahead and just put this in our local drawings. And that one's fine. So I think for Bitcoin, that pretty much sums up what I'm seeing. If we do go to the monthly, you can see that the monthly is losing this level that we've been holding, and so it does also suggest more to the downside, um, potentially in that 12 to $17,000 area. Let's see, our 3 month, we also got a closure there. Just continuing to break down. We didn't pop up. Popping up is what I wish that we could see to turn this around, but we are starting to break down, which is not a good thing to see. Of course, we have a lot more days to go in the 3 month, but wikiing down looks like something that we could do. And again, on the 3 month, we have this naked candle over here that could take us all the way down to 12,000. So just on a quarterly basis, as a quarterly backfill, filling in anywhere between 17,000 to 12,000 would make sense. Just like popping up and filling in this $28,000 area also makes sense because we have a naked candle exposed up here. And on the monthly, we also have a naked candle up here at the 35. But also on the monthly, we have that 12,000 and 15, $16,000 area. So guys, it's a question, do we go up first or do we go down first? But more likely than not, these areas are going to get filled. And we have CME gaps both below us, right, this purple box, and also above us, this purple box. And so that 9,800 and also that 28,000 level is all pretty fair game in terms of price action moving, between those two levels. And so these could be quite big moves, but they would take some time, and a bias is currently to the downside. Let's go ahead and just move on to Ethereum because I just want a quick weekend update. But Ethereum largely looking the same, except it did manage to hold this level because, of course, it had that massive run on the monthly there. And same thing on the quarterly, but we could easily see it come back to $1,000, where we do have support on the on the monthly and also on the weekly. And so that $1,000 again is going to be a pretty fair game for Ethereum if we do break down, and then we can take it from there. But I did suggest that there is a little bit of a cup and handle, a little bit of a head and shoulders type of formation on Ethereum. Right, you see this drawing right here, and so that measured move also takes us down to $1,000, and you can see Ethereum losing this critical level, and so down we could potentially go. And that would be in line with this channel that we seem to be carving out here, and sort of just doing this kind of thing, right? Something like this. And, who knows? Maybe we could get a bounce here and do this. Just hopefully this doesn't turn into a head and shoulders with a measured move down to 600, right? You could easily imagine a head and shoulders, being formed on a diagonal here, taking us down to 600. So let's just look out for this stuff. I don't want to get too far ahead of ahead of myself. Um, we're simply starting to break down. That's the key point. And so for those momentum zones, with the 20 minutes left to go, we do see that Bitcoin has to hold above 1300 in order to save the 2 to 5 day, and ideally above 1330, as I mentioned in my last video that didn't change. But we just are not doing that. We also should hold above 1260. We lose 1260 and down we go. Let me just double check that to see if it's been updated. Nope, it's the same. So basically, 1260 is our bottom line. And ideally, on the daily, we would want to be above 1300. So this is almost the exact same for the daily as well as the 2 to 5 day. So in both cases, we're losing the real kind of confirmation zones, right? If we had daily closures, if we had 2 day closures, if we had a 5 day closure above these two levels, then we would be golden. But as we're breaking down from it, we have to be above 1300 to keep our 2 to 5 day, and we have to be above 1260 in order to keep our just our daily. So guys, again, like both Bitcoin and Ethereum, breaking down, and you can understand my targets for them if we do end up breaking down. I'm going to pretty much end it there for charts because I did do a thorough job on Friday, and most of that is frozen due to the weekend and closed trading. We'll see how we open up later today on a Sunday night for brief hours, and then how Monday opens up, which will be the main event most likely. But before I go, we can just take a quick look at the DXY, the dollar, and we can see that we are starting to get that bullish posture. And as I did suggest, we could have one of these type of turnarounds in the chart, and we are seeing, in fact, the dollar pushing up as we speak. And so it has found support on that diagonal that I had drawn out, which does end up, looks like it ended up being pretty relevant. Now, one thing that I wanted to warn you against was that China may end up dumping some of its US bonds, its dollars basically, in order to buy its own dollars back. And so that does suggest that there could be some funny business with the dollar in the coming week, and we could end up seeing a critical drop on the dollar even if we have a fake out to the upside or something. So just be careful, guys. The China hasn't said how many dollars it's going to sell, but we can imagine that an economy of that size, it could be quite a lot. Now, China doesn't want to damage the U.S. economy because we are their main customer, and at least for right now, we're in a period of peace. We're just kind of saber rattling at each other over Taiwan, but it's not like Russia and Ukraine. Okay, guys. So we're still pretty cool with China right now. We're not friends or anything, but we are critically important trade partners in a fragile economy, and so both China and the U.S. are incentivized to to do as good as we can do for each other while looking after our own economic interest, which do overlap considerably. And so China isn't likely to undermine the US economy. More likely, it's just to do the minimum that it needs to do to make sure that its currency doesn't go into a tailspin. But again, that could cause volatility in the markets. If we were in a state of war with China, then that would be different. Okay, guys. So don't let anyone exaggerate that stuff. For the VIX, we can see that the VIX is continuing to just hold this line, and I still suspect that while the VIX could come down and fill in the CME gap that it left open down here, and that we have this kind of head and shoulders on the smaller time frames, which still could potentially lead us to the charge in that direction, kind of a fake out to the downside. I still suggest that having violated this triangle, this wedge to the upside, and having pretty much tested out the waters up here, that there's a good chance that we could do something like this, right? And basically, this is how the market will die, okay? And that's probably where you want to start DCAing in if we tag that the 40 line, similar to what we did over here. But of course, that was the top, that was another market totally. Just this type of volatility would suggest that stocks are finally ready to fully capitulate. So let's just play this one by ear. We're not there yet. We are just going sideways, but again, we're threatening to recapture this zone, which is really not good for trading. But I do see the possibility of a fake out first because of this CME gap, this little purple box that I have down here. And those aren't too much of a joke. I mean, they tend to get filled. So let's just go back here. Do I want to take a look at USDT dominance? I don't think it's really that important, but you can see USDT dominance is rising, so that does suggest people are getting a little bit freaked out right now. And as people get freaked out, they are likely to get out of Bitcoin and into USDT or dollars. And let's see. There we go. TradingView's messing with my lines again. And so we could see potentially a spike back up to this red line of approximately 7.9% before we end up either breaking through or breaking down. And of course, what we don't want to do is enter this area because history suggests, and using a radial line method, I can derive that we could see an incredibly painful exodus from the crypto market, which would just break our historical levels, which were just set. So we are just breaking all sorts of records in this downturn, and it is a very, very harsh market. So just be careful, guys. If we do break these lines, it should be pretty bad. All right, guys, gonna wrap it up there. We did see a nice spike on Flux as Flux found a little bit of a temporary support, but guys, I still see it as just putting in a lower high and still working its way down. Maybe it found some good support. There is this area right over here which could offer support. We did find support right there in the past. So if I was just to suggest something, it could be, like this. Like maybe we're gonna bounce off of this type of area, right? Um, but I don't know. It kind of looks like we're broken down, and then this thing that we use to launch off of, it looks like it's going to turn that into resistance. You see this rejection right here. So if a flux turns this support area into resistance, then what we could be looking at is just flip this thing back up like this, just kind of tighten that up a bit, and then turn it red, right? So personally, I think this is the more likely scenario, and we drop down from here. Of course, we did lose this region, so I now have to officially designate that one red as well. But watch out for this. Really want to get on top of this, sort of like this candle right here, to see if we can bounce. Having been rejected from it, we're turning support into resistance. So watch out, Flux, guys. XRP still contracting and working kind of around what I was suggesting. We could come to all the way down here. We could come to any of these lines. Um, you can see what we did back here. We had a breakdown and it went underneath this macro support line right here. And so we could do that again. This is the macro support line, and we could break down under it. So watch out for XRP. It's not a done deal, guys. Like there is the possibility that we just have a major breakdown on XRP. And while my very conservative model, this kind of pink one up here, is being respected pretty well, and of course, I suggested to buy over here. I thought it would take longer time, but we did end up bouncing off of that zone that I suggested to buy back in, and that gave a nice 20, almost 25% gain off of that move. So, Alpha Fam, if you did get in on that suggestion, congratulations. I didn't get in on it because I just wasn't watching it. I thought it would take much longer for XRP to get into that area. I do not suspect that it will do that again. I will have to really watch closely. It could hold the level that we're in, but we're going to find out. We need to see how this week goes, okay? And what the Chinese do with their currency. KDA looks like it's just starting to break down more and more. All right, that's what I suggested it would do. That's why I told you I wasn't going to be updating on KDA because we are just breaking the floor and threatening to fall down to like $1.05 or something like that, or one of these intermediary levels. Let's see, ADA, very similar. I suggested a very similar pattern as Kadena and all these other ones, just losing this support up here at 45 cents. We weren't able to hold on to that 51 cents that I needed to see us hold on to, and so I don't care about it until we put in a floor. We didn't really put in a floor. We lost this critical support, and we're just working our way down to 40 cents. Could we get a bounce? We're at the 886. We've actually breached it, at least by wherever I was measuring from. Yeah, that was the total movement. So ADA extremely bearish, but still, at pretty good levels. If you did just want a DCA, Zilliqa, just again, like it's sort of like Kadena. It's threatening to break down. It has this weird little head and shoulders in this formation. It could lose this area, and then we could see it come down to 28 cents, 20, 24 cents, right? Something like that. It is possible, right? And then we would take it from there. But again, like it's at fairly good levels. If we do get a bounce, it's broken out of this little wedge, and so it does have support to build off of, if Bitcoin gets bullish. So all these coins are pretty much waiting for Bitcoin. They're waiting for the rest of the market to signal what they should do. And of course, a falling wedge tends to be bullish. So, ZIL is trying to get ready for something. It's just the market won't let it move, okay? This market is risk off right now. And Zilliqa is obviously a risky asset, right? Like you don't get these type of movements on non-risky assets. And so I just have a diversified set of coins that we occasionally look at to see if anything interesting is going on. I think I skipped CRV, but CRV and ZIL looking very similar. Also breaking down as I suggested, right? As I suggested that we would move from this red box to this green box. And what have we been doing? Just moving from that red box to the green box, working our way down one step at a time, and probably we'll come back there. Okay, guys? So, truth in advertising, I mentioned that a while ago, and so that's why I haven't been doing daily updates. What's to update? We're just literally moving from this red box to this green box, okay? In slow motion. Guys, okay, for real, I'm going to end it there. That was your alpha for the day. Stay safe. Have an open mind, but just remember, Bitcoin is going to close in 10 minutes, and you understand my key levels that we have to hold. We are holding the minimum threshold for the momentum zone that we need to hold, okay? We're holding the absolute bare minimum for the 2-day and also for the daily, but we are losing currently our macro boxes, our momentum boxes, which above those are where we really want to hold. And so we really want to see, Bitcoin close a candle up here, right? At the end of the day, not down here. This is weakness. Okay? This is strength. Yes, both of them are technically above our minimum threshold for momentum, but this is weakly holding on and this is strongly holding on. You see why I do this? Anyway, guys, I'll try to make this a little bit easier to understand in the future, but this is the bear market. We're all just learning. We're all just improving ourselves. That is, whoever is still in the market. And thank you for learning with me and supporting with me. If you have any coin requests, please put them in the comments below. I'll be sure to check it out. And it does look like that we are just going to skirt by for one more day. But with 7 minutes to go, it just looks very dangerous. And we are in very critical danger of losing one of the most important macro trend lines that we've had in this entire era of Bitcoin, right? In this entire cycle, this has been a critical line to hold on to, and if we lose it, it can suggest a very powerful movement to the downside, and getting on top of it has never suggested anything to the upside. Okay, it just suggests small movements. So a lot of risk to the downside, very little risk to the up. Very little reward to the upside. So stay safe, Alpha fam. That's your alpha for the day. Stay safe and happy trading.